Well, good afternoon, Mark Milam here, your mortgage professional. Let's get right to it on May the 24th, headed into the holiday weekend. Lost a little ground this week in terms of interest rates. Not a significant move, but we did see a little bit of a sell-off yesterday here. This is May the 23rd, and we're bouncing back slightly here on May the 24th. What's all this about? Well, it's sort of rooted in what the Fed had to say. Some Fed minutes were released this past week from the last meeting, and it said basically they were frustrated that they have not been able to get inflation back down to the committee's 2% target rate. And it showed that various participants, this is in quotes, various participants mentioned a willingness to tighten policy further should the risk to inflation materialize in a way that such an action may become appropriate. Now, this is sort of in contrast to what Federal Reserve Chairman Jerome Powell has said, which is they are not anticipating that they're going to need to hike rates, but just the very mention of the fact that they're disappointed in the progress on inflation, and that several participants that make up the Federal Reserve Board mentioned the willingness to hike rates. Well, that's all the market needs to begin a sell-off, and that's what we saw here on Thursday. If I could go back and show you, this is what caused that sell-off, and mortgage rates worsened on the news. We've got a little bit of a bounce back today as we head into the weekend, but the damage done over the past 5 business days. What does that mean for the likelihood of a Fed rate cut? So this is the most recent updated projections as of this morning, thanks to Bianco Research. And they're talking about 4 different opportunities for Fed rate cuts. And these are in order from the closest, which is June the 12th. That's the next Fed meeting, all the way out to November. And you can see as the timeline of the year has progressed, how the odds of a rate cut have really dropped. I'm going to take you back here to April the 10th. That's when we got that really hot CPI number showing that inflation remains a significant concern. And all of the odds makers dropped on that day significantly. This is the June Fed meeting. We're now showing a 0% chance of a Fed rate cut at the June meeting. This one here is for July here. This one here is for September. And then the top one, the green one, is for November. And you can see the odds going up as you get further out. But we're really at a 50% odds as we hit September, and then going up a little bit from there to around 60% as we move to the November timeframe. So if this negative reading that we got here on inflation really did the number, and even though we bounced back on May the 15th when we got a good CPI number, that was a number that came in below expectations, we didn't bounce back near to the degree that we lost on April the 10th. This just tells me that the market still anticipates that we've got a healthy economy, we've got a growing and expanding economy, we've got a very robust stock market, we've got a very strong jobs market, and there's just not a lot on the horizon that says, hey, this is that thing that's going to come along and it's going to kill this period of economic expansion, and we're going to see the economy slow down and the Fed's going to cut interest rates. So we're just not seeing that level of data, and until we do, something tells me that this option of a Fed rate cut is going to continue to always be about 3 to 6 months away, that we're going to constantly be talking about a Fed rate cut somewhere between the next 90 to 180 days until we really start to see data that says, hey, not only the jobs market, but the stock market, the overall spending from the consumer, these things are all slowing down and perhaps even starting to contract a little bit. That's when we're going to see a higher degree of odds for a Fed rate cut. In the meantime, if I can be of any service to you over the holiday weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good week.